Good morning, ladies and gentlemen. Everybody, welcome back to another pre-market live stream. Thanks again for tuning in. It's a pretty crazy day in the markets so far. Once again, markets are halting overnight on more Federal Reserve news. So we'll wait a couple minutes and we're going to get rocking and rolling here. All right, so I really plan on covering some of your top stocks for the day that it seems a lot of people are talking about, which would be Microsoft, Apple, OPGN for a penny stock. Probably watching Microsoft because of the Bill Gates news stepping down from the Microsoft board. And then also Apple because Apple just got fined $1.5 billion. OPGN because it's really the only penny stock that seems to be somewhat going up pre-market today. So we're going to try and cover a majority of those, kind of the hotter topics for right now on the day. Yeah, strap in, everyone. Yeah, you could probably say that again for sure. So let's do that first. We'll start off here today by touching on the SPY. We're going to keep today as a broad overview day for anybody new that joins in today. Kind of really help you guys kind of navigate the markets and so on. So anyways, market's still kind of continuing down today, which is, I mean, surprising, not surprising, however you want to call it. We do have a pretty big head and shoulders pattern that's playing out sort of right now. So ultimately, I want to look at this longer term chart right now. So this is a SPY on a 20-year chart. So if you see where we're at in terms of the cycle, we're really high in the cycle. So all this selling pressure makes sense even with or without the coronavirus being there. I did expect that we would get a bounce on the market, okay? I did expect that we would get a bounce. We started bouncing. You could probably call it a bounce. I mean, it bounced from 240, 250, all the way back up to like 270. So I guess we had a 20-point market bounce there. But I thought we'd get a little more. So just want to point that out. Right here on this white trend line is where we bounced the last time. We just got there last week. We've already bounced that level, and now we're kind of fading back down. So some interesting movement, I got to say so myself, all right? Good morning. BYND test. Everything should be pretty much at low of day right about now, okay? So I want to show you guys a 5-day chart on the market right now. This chart looks a little weird. The settings don't seem to be right on it. I don't know. Oh, you know what? I have an idea. Give me a second. Appearance, time access. Now we'll do 100 at least. So, what you guys can kind of see in here is it did have a head and shoulders pattern on the market, and now we're kind of dropping and playing off of that right now. So I kind of expect we're going to fade more or have at least an attempt to drop out of the gates. A lot of the stocks today are kind of opening up, lower. So they are kind of in a bouncing formation. But honestly, you should probably let the markets play out for a little bit by themselves, just because there's a lot of uncertainty right now, especially with the halt happening overnight. A lot of people could be antsy to get in the morning and maybe even sell. So for me right now, I'm just going to kind of sit back, watch patiently on majority of things for the morning, okay? Chuck, actually, you're right. There's really only one safe play right now in the market if you're looking for things going up, and that's really either inverse gold ETFs or volatility ETFs. There's really only two things going up in the market. So whenever you get a kind of a panic in the market, everybody's going to sell pretty much everything because nobody really knows full extent of what's going on. So normally there's just an initial panic across all assets, and you normally see that every single time, even in 2008 financial crisis. We had gold and silver get plummeted. So that's kind of expected when you have a really big panic that everybody kind of sells everything. That should kind of be expected. But you're right, there really isn't anywhere that's 100% safe right now. John, pure panic. That's really the only thing that I can wrap my head around on gold and the precious metals is really just ultimately panic. I mean, there's some other theories there, but ultimately panic. Precious metals, panic. Just like everything, panic. Yeah, GLD, JNUG. I mean, again, we'll take a look at them. There's really not too much to look at, but this maybe can wrap your guys' head around it a little bit differently, right? So let me maybe do like a 3. I don't know why this chart does whatever it does. The view is always off on it. You should be able to see everything here. I don't know why it's like that. Okay, so let me shrink this down. So let me point this out. So where GLD and SLV are, not in particular, where they were just maybe back a week ago, 2 weeks ago, is they were really high in their cycle. So the selling is very aggressive, I got to admit, but what they're doing and where they're going is not normal. This is actually respectable because, again, look at from low to high in the cycle. I mean, they were high and now they're low. So they're kind of just coming back to normal trading patterns to a degree, right? So, and if we look at SLV is probably very similar, right? So low, down, and then kind of broke. This SLV kind of broke away. This is trading way outside of its norm right now, which means it's kind of on sale. And then if you look at just spot price gold, so let's go and look at this is /GC. So when you go and look at /GC, you know, on a 20-year chart, /GC just got back to its trend. So we're seeing a pullback off that. But ultimately, this is still in a big uptrend. But again, I think what we're seeing a lot is panic just from the overall market conditions. But ultimately, long-term, gold is still in a good uptrend. I still would think that we're going to see gold near the 2,000 price. And then if you look at maybe longer-term SLV, right, longer-term SLV, in theory, is on the buy side. Still, even with this massive rolling over fashion, in theory, we are on the buy side. And I would honestly be probably continue to buy into that. This was 08, right? You see how silver was reacting in 08. In 2007, we had this really big push on silver just before the financial crisis, and then we crashed all the way back down below supports, and then we ripped for the next couple years. If you go and look at what it's doing right now, it's pretty much exactly the same. We had this nice run up in 2019. In 2020, we have started this financial crash in the stock market, and prices are getting smoked. But we're still on the buy side, the lower buy side of the channel in silver. So right now, in theory, prices on silver are actually pretty low. And as we go higher in cycles, where I would look to sell out and close out some of my precious metals positions. So right now, I would say expect more downside on silver based on the way we're moving. You're probably going to have a lot of people panic out if we start getting below 12 and 13. You're going to have those investors get weak hands, shake out. So, like I said, ultimately, I think we're just kind of panicking across multiple asset classes. But, you know, if this is the top and we go into recessions and bad times, I mean, yeah, you can expect there's probably going to be some sort of recovery in silver and or gold. Outlook for the market end of 2020 is just negative. I mean, we're not gonna be back at all-time highs. I don't really see us being over 300. My price target for the markets right now is my price targets for the market are all the way down here. So pretty much 1,600, 1,800, 2,000 is my price target for the S&P 500 right now. Price target was actually met on Tesla, but since the markets are still getting smoked, not getting long Tesla, But our first initial price targets was really like the 650 to 550 zone. So we've gotten there, but again, the markets are still moving pretty aggressively down. So we're going to give Tesla a little bit more time and see if we can get prices now down towards the 400 mark, lower in this cycle pattern. But ultimately, that's it there. Nope, not that I know of, if you're talking about the volatility. Leverage ETFs aren't necessarily better since volatility is, well, okay. Pretty much, yeah, volatility ETFs are good as long as, when volatility is high, they are essentially better, or you're going to have a bigger range, if that is your question, yes. Yeah, Jay Carter, what we just covered should answer the question you're referring to about gold. Probably the easiest way is to invest through stocks or ETFs. Yeah, you can look at TLT. I'm not. Yeah, I mean, there's a lot of things with volatility. UVXY, TVIX, JDST because gold is getting smoked, or what was the other one? Dust. Yeah, dust. But even these, even JDST and DUST, I mean, I don't doubt that they can actually go higher. Those would be good ones to keep an eye on. They've already moved quite a bit. Gold's already gotten smoked quite a bit. But if gold continues to go down, JDST and DUST could be some good ones for you guys to watch long bias. No, I don't really see. I don't see a bounce to 300 at this point. It could, you know what? I don't want to say no, because this is a very valid potential setup that I see is a big sweeping. I don't think quite 300. Maybe. It's hard to believe it, but maybe. But if we do, I see a head and shoulders pattern here, where we bounce off this trend line support, head back up to our previous resistance, which on the daily chart would also be right here. All right, so I think we could bounce and see some sort of rolling over situation, but a bounce to 300 seems very, very unlikely at this point. No, Tesla will not go up near the highs short term. Absolutely not. Eli, yeah, if you can't, you just got to log in to our website at boilerroomtrading.com, and that's how you always have access to our trading room or private trading room. Just log into your account and go into your course curriculum, and it'll be right there. One of the first top sections in the course curriculum. SPY at 240, big support. Yeah, that's what a lot of traders are watching. Excuse me, let me put it up here. Yeah, a lot of traders are watching pretty much this zone right here, the 230 to 240, when in reality support started right here at 263. So, from a price action standpoint, yeah, there's going to be a lot of traders trying to pick a bounce here. Support really started at about it was actually like 245, excuse me. Support really starts here at like 246, and we have price action support down to like 230-ish, 232. But you're right, that's what I mean is we're in this bounce zone, right? We've made it to where people would be willing or considering the idea of a bounce. So again, it was hard for me to want to be short bias down here at these prices still, because again, we have a perfect level to bounce off of. I mean, this was a super significant zone, which tells me there's a pretty good chance we're going to bounce somewhere in that zone. And I think we do something like that, and then we go back down. That's my estimates there. Not as much. I mean, long term sometimes, but most of what we do is just intraday short term trading, all done live. So basically, the way that you're seeing this right now is basically the way that I trade live intraday. Predictions on bank stocks. I mean, they're gonna go down. Everything's gonna go down, most likely. Prediction on banks. What's happened recently with banks? Well, if you go to a zero interest rate economy, well, no, not necessarily. Those banks will still make. They're going to get hurt. It's obvious. Banks are going to lose because interest rates are lower. So when interest rates are lower, the banks aren't making as much money on their loans. So banks are going to lose money. If you go to a negative interest rate economy, then banks are really going to get hurt much more because they're going to be making far less money, if not any money. So yeah, banks are going to get hurt here. Yeah, probably. Tesla will most likely drop lower. As long as the market keeps going lower, everything's going to go lower. It's pretty much just a fact. Yeah. Yep. Those are actually the only plays I would even consider the idea of being long would be things like Netflix, stocks like Kroger, Walmart. You can even argue like online gaming companies, but that's it. Anything that's online based that doesn't have pretty much, yeah, that's it. That's the only thing I could even come close to thinking justifying is really is again grocery stores and online like gaming. You can make money in a bear market by shorting stocks, playing options, playing inverse related ETFs, counter trend trading bounces. Pretty much all the same ways you make money as things are going up. It's just backwards, going down. Interest rates for a cash out refi. Should I get a loan on my rental house? And it's free and clear right now. Down 20%, probably not. And the reason I say down 20% is just because, well, I mean, again, it's possible. I'm going to say it's not possible, but to go down 20% means we'd have to move like another 10%. And we haven't been seeing those sort of trading days. From what you might think, we're not seeing those trading days. They're all happening in the form of overnight gaps. So from an intraday perspective, you're not getting 10% moving days. I mean, you're just kind of you're having some crazy rallies, but we really haven't had a day where we've opened up with a monster gap and actually had like a solid trending day. We haven't had one of those. So so for right now, I feel like we're not, but so 20% down today, that'd be pretty impressive. I would say a 20% down day is only possible once we for sure significantly break this level. We have to, for a 20-point down day or 20% down, we have to get through 246, like officially 100%. We're at 239 now. Sorry, it's been a while since I looked. So again, it might be possible today because, hold on. Oop, is that? Yeah, that's 240, 264. Hold on. So now that I put that big red trend line on the chart, you can see we broke it today. Rejected, came back up again, so rejected. Now we're rolling down. So yeah, you could argue that today actually could be one for the history books where we're going to roll and we might actually crap out big time in the market today. That's actually very plausible. Yeah, because again, well, we'll see, but yeah, it's possible. All right, so truly, yeah. Yeah, so now that we've kind of covered a good amount of information here so far in the markets today, so a couple things that I'll watch are probably Apple today. I mean, pretty much as long as the market goes down and it's bad, any stock will go down. But probably going to watch Apple just because they had the news of the 1.5 billion-dollar fine. I think Microsoft could be an interesting stock to watch today because of the news of Bill Gates leaving the board. And then also OPGN, I don't know what it looks like now, but it was of the only kind of penny stocks that looked even somewhat decent that had a big move. This pre-market is pretty much done for right now. But as the prices kind of get down into some of these lower levels of the channel, I think we'll have some nice dip buying opportunity. So right now we have a potential bounce here at like 318. So I'll be watching OPGN maybe for a bounce trade, but that's probably about it. I don't think. Do you say we don't? I don't think you can ever. No, I think it's. I think it's possible, but right now our first level of support comes in at 237.04 right now. Actually, I don't want to say. Never mind. Let me rephrase that. Our first level of support does not come in at 237.04. We've just rejected our level of support. So in theory, it appears we're actually breaking down. We're actually changing intraday trading trend. So for now, I'd have to be bearish now. Before I was bullish until we kind of rejected like that. Now I'd have to be bearish at the open for now. Just for now. But again, there's more to it than that. But again, if you just kind of look at where you're at in the cycle, we are low in the cycle. So in theory, we are on the buy side of the downtrend. So again, to touch things up, again, here are the volatility ETFs you could keep an eye on. TVIX is now up to 500, which is just insane. From $38 to 500. So this really basically tells you that a lot of people think the markets are just done for and are going to crash because the volatility index went all the way to 77. So yeah, you could keep an eye on something that's a little bit cheaper is UVXY. This is 84. So this sees some good volatility. So if the markets really crap out today, keep an eye on UVXY. This could be a nice bullish trader for you guys on the day. I'll take a look at CODX. I looked at it earlier, was pretty much a dud. I don't think it's going to be anything today. Yeah, I would probably not trade CODX. It's probably not going to give you what you want right now. Let me double check OPGN one last time. Yeah, I think again, I think it's just a day for watching, and really just paying a very close attention to the S&P. You know, I haven't looked at mRNA today, but I'd be interested in looking at it. So with mRNA right now, there is a bullish divergence on the 1 hour chart. see what it looks like over 10 days. 10 days, do we have one? 10 day has one. Kind of beaten down. Maybe pull, squeeze off that. Your day. Yeah, maybe a reversal. You might see a long move off that. I wouldn't really be super crazy about. You're in the buy side. I would say you're kind of on. You're actually just right on trend, honestly, for the past couple days. You know, you can argue you're right on trend. It's not the most amazing formation. It's kind of a toss up right now on this. I could see it squeezing off out of the gates. But yeah, I mean, if you want to look at it from looking at the daily chart, you're pretty much right on trend. I would say looking for a bounce now is a better idea than trying to be short. So I would be more on the long side. I just don't know if it's going to be really, really good. Yeah, I guess I was totally wrong about ACB. No doubt. No doubt. Yeah, I remember that. I remember what else. Was it ACB? Yeah, I thought ACB would break out when it was in the $10 price, and now look, we're at all the way down to freaking, I don't even know, probably less than $1. I know. Believe me, I know. GDOT, I'll take a look for you, but I don't know. Well, you missed the buy on that. You kind of missed that one. Yeah, the buy price on GDOT was down here at 20, which was kind of, well, let me show you a different time frame. Yeah, so this was the buy signal down here, kind of off this white level, white trend. So yeah, you're kind of late to the buy side on GDOT for now. I'll show you. We'll go look at OPGN. Yeah, OPGN right now is moving up. Yeah, I'm still really not crazy about it. Again, the ultimate breaking move is, yeah, kind of over. I mean, yeah, really resistance right now is at about like 370, maybe 380. I'm not a big fan of it right now. It's not on any support systems, so I'll pass on that. Nope. Yeah, gold. So we'll do one more on gold here before we take off. It's 9. So just to wrap things up on gold really quick for everybody. Oh, that doesn't look. Oh, hold on. So here's the yearly chart on gold. So gold is high. It's on the sell side of its cycle, so we're coming down. That's pretty much it, right? So low point of cycle, high point of cycle. Now we're kind of getting back into the low point of the cycle. And everybody's wondering why silver and gold are crashing while the markets are going down. Isn't it supposed to be the opposite? Yes. But when everybody panics initially, pretty much everything gets hit. Yeah, people are liquidating, people are taking money out, moving money around, so it's a very common thing to happen. A depression, I mean, a depression is only possible because of what, if you want to even talk in terms of depression, it's only possible because of what the Federal Reserve and the United States government have done over the past 13 years. That's the only reason one is really possible, because of the sort of bubble they've put us in. I don't think a depression is possible from that's just it. Like, unless pretty much the bubble of our debt and all this fake money printing pops, then I don't see a depression happening. It could obviously happen because our system is just built up on fake money and artificial nothing. So our whole system is basically built on a deck. It's like a house of cards. It's a bunch of plates stacked up really high, all on one of each other. So if they ever kind of do break apart and come crashing down, then yeah, you could see it. But But again, you've already seen the preventative measures that the Federal Reserve is willing to take to keep the markets from coming down on themselves. They're willing to pretty much inject $1 trillion into the stock market artificially. So clearly you can already see that our system is broken if we have to do that. So no, that one's too hard to say. All right. So everybody take care. Have a good rest of your day. Good happy morning to you. Monday morning. Everybody take care. Have a great rest of your day, and I'll see you guys on the next one.